Welcome to the morning brief. We report on the previous trading session's closing prices of the major economic indicators. Closing prices in itself doesn't mean much, so we will also give context for such closing prices, making use of short-term technical analysis.
Good morning. Today is Tuesday, the 11th of July. Yesterday's session was again driven by bond volatility, with the US bonds rallying this time around whilst the dollar was sold off to its short-term support level. These moves might be a result of the weaker Chinese PPI and CPI numbers, which potentially points to a slowdown in demand, which the market see as a precursor for the US to also print weaker CPI figures due this coming Wednesday. If the US prints weaker than expected CPI figures, it could point to a slowdown in the market. This could in turn lead to a slowdown or even a termination of the interest rate hiking cycle in the US, which should see funds return to the US bond market, which currently yields a great return. US stock market was however in the green, except for the AI rally stocks that blew off some steam from its recent AI rally. Let's have a look at the indicators. The DXY dollar index closed the session down 0.29% at 101.96. For the last couple of weeks, the DXY traded within a range, with 102 as support and 103.85 as resistance. The DXY therefore closed the session below its short-term support and is bearish for the dollar. The US 10-year Treasury note ended the session 1.62% lower, at 4.004. Trading range of the 10-year note for the last 4 weeks was 3.69% as support and 3.85% as resistance. In the last week, we saw a breakout of the US 10-year note to the top, rallying almost 6%. A pullback, as is currently the case, is thus warranted from a technical point of view, but support should come in around 3.95%. Keep note that the bond market is the big daddy in the market and should be known as Steady Eddie. The high percentage moves in the bond market indicates to instability and therefore heightened risk. If we see bond yields higher from these levels, something big might break. Brent crude oil ended the session 2.55% higher, at $78.47. Oil joined the stock market rally today, and closed higher as the dollar sold off. With Saudi Arabia and Russia joining in oil output cuts, the floor might be in for oil and higher we go. However, direction will be determined by the dollar's movement. Gold had a quiet day, ending the session 0.06% lower, at $1,931.30. Gold didn't move higher on the back of a falling dollar. Either gold is correct in believing that the fall in the DXY is not warranted, and we might see a resurgence in the DXY come this Wednesday with the CPI print, or gold is wrong and should rally off the weaker dollar after the CPI print. Wednesday's CPI numbers will give us some clarity. The SPY ETF, which tracks the S&P 500 index, closed 0.24% higher, at 4,409.54. The QQQ ETF, which tracks the Nasdaq index, closed 0.03% higher, at 366.36. On the local front here in South Africa, we saw the JSE Top 40 index 0.59% lower, at 69098.38. We believe this coming Wednesday's CPI print will give better direction to the market, as the recent moves might be preemptive on weakening CPI figures to come. But what will happen if CPI stays sticky? That is a wrap for today. Thanks for listening, and we will chat again tomorrow.